Hey everybody, welcome to the ANDIKA Bulletin for Friday, 6th of January 2023. So prior to the US market open, futures were trading higher, suggesting there'd be a green day on Wall Street. But then there was a triple whammy of better than expected labour market data, which then sent US stocks and bonds reeling as market expectations for the Fed's rate trajectory shifted hawkishly. So terminal rate expectations are still rising and they're still sitting around about the 5% mark. Now, stocks bounced briefly on a very unusual dovish sounding comments from the Fed's Jim Bullard, who noted 2023 may be a deflationary year with rates close to restrictive. But then later in the day, Bullard went hawkish again, saying that a strong jobs market means it's a good time to fight inflation. Actually, Bullard was right with his second comment. The market is dramatically decoupled from the tightening financial conditions, as you can see here on this particular chart. Now, that all dragged down stocks lower, with the NASDAQ leading the way. And we can see here the NASDAQ debt was down about 1.47% or 153 points. The Dow was down just over 1% or 340 points. Now, the big news that came out just a couple of days ago, of course, was the release of the minutes of the FOMC December meeting. So keep in mind, the Fed has slowed down their tempo with rate hikes. In the December meeting, they hiked rates by 50 basis points. Prior to that, there was 4 lots of 75 basis points. So yes, they've slowed down a little bit as well. But what the minutes really confirm is the Fed is going to keep interest rates elevated for the foreseeable future, and the participants explicitly warned the market of misrepresenting any sort of a slowdown or talk of a slowdown concerning from their recent rate hikes. Here's a quote. A number of participants emphasized that it would be important to clearly communicate that a slowing in the pace of rate increases was not an indication of any weakening of the committee's resolve to achieve its price stability goal or a judgment that inflation was already on a persistent downward path. So that's a bit of Fed speak. So while it's clear the Fed was always going to take its foot off the pedal in terms of rate hikes for this year, the market hoping that there'll be a very quick pause and then a pivot doesn't look like it's going to be happening at all. And I made reference to this on my recent video concerning market projections, forecasts and guesses for 2023. And just to quickly re-summarize there, I'm of the view that the US Fed will hike again in February, March and April, and so will the RBA. I think the Fed will take their cash rate up to about 5.5%, and I think the RBA will take their cash rate up to 3.85%. Then they're going to sit there for probably most of the year. And if there is going to be then the pivot, it'll be towards most likely very late third quarter or possibly even into the fourth quarter. So here's a very interesting chart. This is the dot chart that the Fed likes to issue out. So you can basically see here on the chart all the dots lined up at 4.5%. No one's changing. Everyone's on the same page. But then as we go out to 23, we can start to see that Fed officials are less united in their outlook from 24 and beyond. And then you can see how in 25 there's the majority of Fed projections are obviously getting down to the 3 to 2.5 terminal rate arena. So the markets know these cuts are going to come. It's just a question of the timing. But in the very short term, they're not going to happen. And I just would like to also finish up just with this very, very interesting chart. No, not my favorite one of You Are Here, but this particular one concerning an overnight landmark event, which probably wasn't reported anywhere in the mainstream media, was that for the first time since 2014, there are no negative yielding bonds globally. Look at that chart. So from 2014, we started to see countries around the world offer negative interest rates, and it got to insane levels, as you can see, up until 2020, and it's virtually all just fallen apart because we're seeing globally interest rates are going up, people are hawkish. So that's a very interesting part of history that you can see here has now unwound and completed itself. Anyway, that's the ANDIKA Bulletin for Friday. Take it easy, and we'll catch you next week. See you later.